Welcome back. You are watching the state of the economy. We have been discussing the key takeaways from the Reserve Bank's annual report. Upasana Bharadwaj, senior economist at Kotak Mahindra Bank, Professor Govinda Rao, a former member of the Prime Minister's Economic Advisory Council and the 14th Finance Commission, Pinaki Chakraborty, professor at the National Institute of Public Finance and Policy, NIPFP, and Soumyakanti Ghosh, chief economic advisor at SBI. Soumya, Upasana was pointing out the optimism on growth in the annual report and the confidence on being able to finance the current account deficit. Do you share the RBI's confidence, or are you a little worried about both growth in the second half and current account deficit?
No, I think, yes, I am concerned a little more on both on growth and current account deficit. But on the current account deficit, I would like to highlight one important point over here. If you actually look to a simulation, and as Upasana was saying, 30 to 35 billion FDI inflows, this year the total portfolio capital outflows are, I think, already close to around 10 billion. So even if we are assuming on the basis of that and make a comparison of the debt creating flows and the non-debt creating flows and try to see what is the percentage of that financing the current account deficit, I can see that there is a significant jump in the debt creating flows in financing the current account deficit, which I think could be higher than 40% or so, I think close to 40%. If that assumption materializes, I think even though right now the RBI has said that FDI could be the driver of financing of the current account deficit, I think there is an upside risk in terms of financing of the current account deficit, because BOP for the first time in 6 years is going to be in the deficit this year of around 15 billion. That means a foreign exchange depletion of around 15 billion. And if the debt creating part finances around 40 to 42% of the total current account deficit, that's not significantly a cause for worry, but definitely that will mean that the pressure on exchange rate will continue to be there, because debt creating flows could actually go out as quickly as they come in. Second, regarding the growth, I think notwithstanding the first quarter growth numbers, which will be released on Friday,
yes,
which will possibly be on the higher side, I think the second quarter growth rates, at the second half the growth rates could be on the lower end of the 7 to 7.5% bucket, because there is a lot of uncertainties on the external front. Oil is still in the range, oil is unlikely to go below $70. Then there is the pressure on these agriculture. Monsoon has been erratic in several parts, so we can actually see some sort of an impact on the food inflation, oil inflation. And I will not be surprised if the rupee is on the, rupee continues to be weaken a little bit. So there will be pressure on growth in the second half. And my sense is that the first half numbers will be, the first quarter numbers will be good, but definitely in the second quarter there will be some moderation in the economic activities, because there is a constant on fisc also, so you cannot grow at this rate of government spending significant amount of capital expenditure in the rest of the year. So taking all these factors into consideration, growth will be impacted in the second half.
Okay. Well, your point is taken. The RBI has given red flags on inflation, and you and Upasana have put red flags on growth as well. Professor Chakraborty, I don't know if this is a topic of much interest to you, but the Reserve Bank's February 12th circular has tried to ensure that the banking system completely belches out the last shred of NPA, which it probably was trying to evergreen. It's made the system strict. And what the report also says is it is planning to extend this recognition of default on the first day, 1 day default, reporting it to the central database, the CRILIC, and immediately banks sitting and trying to restructure the loan. All that is also going to be extended to the NBFC sector. Are you getting a sense, which is what the Reserve Bank is saying, that if these structural reforms are in place and the public registry of credit is in place, is India at least set in motion some structural reforms in the financial space? Professor Chakraborty.
Yeah, before I come to that, can I say a few words on the growth, because I thought it's very important, because to be fair to RBI, I think RBI's growth projection certainly is optimistic. At the same time, there are reasons which are, I think, very convincing. One is the global growth is growing traction. That's what the RBI says. And RBI also says that rising external demand will help growth. So it's not only FDI flows that is going to finance the current account deficit. RBI also emphasizes on, higher export earnings should also help. Whether that would happen or not is something that we have to watch and see. But certainly RBI talks about that. And on the domestic front, RBI has made 3 points. One is, of course, the headline inflation.
Yeah.
Second is the normal monsoon. And third is fiscal sphere, where it talks about efficiency of tax buoyancy post-GST. I think that is where there are issues, because GST is still stabilizing. Of course, it is a lot better than what it was in July 1st, 2017, and after that, 3-4 months after that, I think things have been stabilizing. But I think GST revenue across states are still not buoyant. So I think if there are fiscal slippages, that can have an adverse impact on growth. That's the first point on the growth. I wanted to emphasize. On the second issue that you have talked about, banking sector regulation, if I put it together, I think it appears that they are going for more structural reform, which actually would try and control from the very beginning the process of NPA formation and bad banking. But how it works out, one has to see. I'm not too sure, but at the moment. But I think apart from forward-looking policies that RBI has taken, but the bank balance sheets are in stress, and we need to resolve those issues as well, because the NPAs that are already there are very large. So these are forward-looking policies, most welcome, but we also need to resolve our past NPAs, which is very significant. And unless we do that, I don't think private investment is going to pick up very immediately, and that would have an adverse effect on growth.
Okay. Well, Dr. Govinda Rao, last word to you. The last word of the Reserve Bank's own assessment is the hard-earned gains of macroeconomic stability that have defined the recent period as its greatest achievement need to be preserved as an imperative within this endeavor. So while they speak of some structural gains that have been made, on NPA recognition and restructuring, on GST, on a public registry of credit, the hope of infrastructure kicking in, they point out that, this macroeconomic stability that they have achieved by inflation targeting should also be retained. Your overall comment, do you think the economy is poised for better growth with macro stability?
Well, I think, to be fair to the Reserve Bank of India, as both Vipassana and Soumya Kanti Ghosh said, the first half, I think particularly because of the lower base effect as well, you would have a higher growth. The second half, I still think that things could be, would not be that pessimistic if we are able to get the investment cycle back in the system. These structural changes that you have made, the resolutions that you try to do. There is Allahabad High Court judgment. Now there is a lot of issue on this thing. But one of the things that possibly will trigger is fast pacing of the resolutions. Which is extremely important. I mean, already some 12 stress assets are getting resolved, and that is extremely important because that will start, revive the credit cycle, lending cycle.
Yeah.
And private investment will have to come up. At the end of the day, ultimate sustainable growth is possible only when the private investment is brought in. And we still have a huge problem of twin balance sheet crisis.
Yes.
That's something which we will have to do.
Absolutely.
And one small thing that I want to say to supplement what Pinaki said earlier, namely that you see much of the growth in income tax revenue has been due to GST.
Yeah.
In fact, you see, you can also see the international experience in that.
Yeah.
When Thailand introduced GST way back in 93, the revenue neutral rate was 10%. They levied the tax at 7%. Their income tax revenue increased by 25%.
Okay. Fair point.
I mean, this is because I see that formalizes the economy, and most of the people. So
Point taken,
let us not attribute it to the wrong causes.
Wrong causes. So we have to wrap up.
GST, I
take your point. I take your point entirely, sir.
Revenue buoyancy will continue.
Yeah. Oh, that's excellent to hear. On that positive note, we wrap up this special show. Thank you very much for watching.